Nightingale here, coming at you from East Texas, 6 p.m. Central Standard Time. This is our Market Monday broadcast. All of you out there, Facebook, YouTube, wherever you're joining us from. Of course, I know a lot of you will be joining on the recordings. I always want to address that because I know a lot of you guys watch there. Of course, many of you will be joining us here live tonight. So thanks so much for coming out. Again, we started a new series last week on market cycles. I'm going to recap a little bit of that before we go into today's topic, diving deeper into those market cycles. Very important that we understand what the seasons of the market are, just like the weather. We don't know the season. We can wear the wrong clothes. We can make the wrong plans. We can do all kinds of things that are out of season, and we want to be in season. And that's true in the market. We've got to know what to do and what not to do. And we can know that based on what the season is. So today we're going to go into another season. I will get into that as well tonight. Of course, as always, if you are joining us live, go ahead and drop your name, comments, questions, concerns, anything that you might want to bring up. You can pop it in the comments there, and I will have access to that, of course, and I will be able to address that for you. I would love to interact with you as we go along. So that is one way to do that. We've had some great questions popping in over the last 3 or 4 Market Mondays that we've done. And I guarantee, those questions at the very least are going to get your question answered. Why not get the most out of this time as you possibly can? But beyond that, somebody else got a question answered as well. And maybe they just learned something that they otherwise wouldn't have learned. So it benefits everybody in the group if you do that. So go ahead and do that as well. We're going to specifically look at bear markets tonight, what we defined last week as a market season in decline. Now, when there is risk in the market, for stock traders, risk is stocks going down. So we're interested in advancing, right? Bull markets, because of course that's where we think, oh, that's where I make money. The stock is going to move up. If the market's trending up, that's how I make money. But I've said this maybe 1,000 times now on different webinars and broadcasts and programs here at Tradeway. Amateurs follow the profit, but professionals manage risk. In my own trading, I know I'm on track when I am fixated on the process, and I'm managing my risk well. Do that over time. That is how we implement the Tradeway system. But chasing the profit, not so smart. Doesn't work so well, not the way to go, and not how we implement the Tradeway system. Why do I say all that? Well, because we ought to understand bear markets. We ought to understand what it means when the market is going to move down, okay? Because that's our downside. That's our risk. So we don't want to skip over bear markets. Now, obviously, there are some bigger implications because a bear market isn't just a move down. A bear market is a market down. Okay, but down a little, down a lot. We're going to talk about that tonight. So that's important. Jeffrey says 69 degrees, partly cloudy in Colorado Springs. This is the one-stop weather shop, at least for Colorado Springs. Thank you for that, Jeffrey. It is rainy and cloudy and unseasonably cool here in Texas, and I'm very happy about that. So appreciate you sending that in. So bear markets, we're going to get into that tonight. Now, a little bit different. I want to do this because I know a lot about this. I just want to remind you guys, in 8 days, we are doing the 5-day Faith and Finance Challenge. That is a free challenge. If you were in the last challenge, go ahead and wave, pop in a comment there. But we're doing another one. This is upgraded, right? We're going to revamp this thing, and we are launching a 5-day challenge. This is really about us helping you have a biblically based breakthrough in your finances. It's both mindset and skill set. Those are words we throw around here a lot. We say it meaningfully, but we do say them a lot. What does that really mean? It means you and I are going to go on a journey for 5 days where I am going to strive to bring breakthrough to the way you see money, think about money, pursue money, pray about money, trade your money. And we are going to get into some practicals of the skill sets as well. This is the 5-day faith and finance journey. I'm going to teach you some things that give you more conviction, more vision, more power, more passion as you are pursuing God's will in your life for provision. Yes, God has a will for your life in provision. And if we don't have the discussion, then we don't grow in that vision. I want you to have a provision for the provision. So that's going to be the 5-day faith and finance challenge. I'm actually popping the link in there. Jeffrey says, I was in the last challenge and I'm amazed you're doing it free of charge. Well, we do it free of charge 5 days because this is really important information, and we want some folks who've maybe not done one of these with us to understand what we bring. Okay, so we're going to put the value of this in the roof. Okay, you're going to get more than what you put in the time investment. That's my job. That's my goal. There is a VIP. If you click that link, you will notice there is a VIP. VIPs, I've been saying, is where you want to be. I'm calling the VIP of this 5-day challenge. The VIP is what I'm going to call the breakthrough team. And I'm going to go, and this is true of the whole challenge, but I'm going to go extra far in this breakthrough team to draw a little target on you to get breakthrough for you in this challenge. You'll have an extra 30-minute session with me every day that I go live. You're going to get Bible teachings. You're going to get something I call the pain pleasure tipping point teaching. I'm going to do some hot seat stuff with you. You're going to get access to the recordings. Okay, the recordings will not be available forever. It's going to be a very limited time. If you're in the VIP, you get those recordings. We're going to do some drawings and prizes for the VIPs. So that's for people who want to go to the next level. It's a very small charge, but you can jump into that VIP. So make sure you click that link. Patricia says, I'm in the VIP. I'm excited. You know what, Patricia? I got to say, I'm excited. We're a week out. We're 8 days out. I'm very excited for the challenge. And of course, because we're so close, I'm doing final touches in preparation. And the more I do that, the more I'm diving into the material. The more I'm diving into the material, the more I'm realizing just how important it is, which is why I'm doing the breakthrough team, because I want to smash into new areas with people. And I know that the right people for VIP are the people who want to do that too. So this is the 5-day faith and finance challenge. It's not the 5-day faith and finance pleasure cruise. Okay. Tradeway does trips. Okay. You can come with us on a trip. We just went to the Dominican Republic. This is going to be a challenge. Okay. It's going to be a challenge. I want to empower you to meet challenges. So we're going to do that together. And that means we're actually going to get something out of it. Right. So my goal is that you'll get wins out of this, micro wins. And at the end of 5 days, you're going to have power and vision for your money that you hadn't had when you started. And I would say, if you're joining us here on these Tradeway broadcasts, you've probably got a pretty strong reason why you would want to see that. I don't even, please hear me when I say this. When somebody tells me, well, Blair, I want to make more money. I say, you and me both, you and everybody. That's what everybody says, right? It's valid. It's just not very deep, because the reason that you want to make more money is the real reason. And that is what I want to help you move towards. And we're going to do that very practically and functionally. Like I said, I'm hosting that. So I wanted to let you guys know that tonight. Simply click the link and join us there. All right. That said, everybody, Nancy, I don't want to forget. I see you there, Nancy. Of course, Patricia, thank you so much. And Jeffrey. So if you are joining tonight, you haven't said hi, you want to jump in, you want to ask a question, you want to disagree with me, I always throw that one in. And so far, we haven't had a lot of that. But I welcome it. It's okay. I don't require that we all agree about everything. My security on this broadcast and in the world doesn't come from me knowing everything. I don't feel like I know everything. And I don't feel like we're going to agree on everything. So I'm fully open. I'll say that. I haven't said that on here in a long time. to whatever discussion we have that is profitable for you here on Market Monday. Now, that said, I want to get into bear markets. Okay, bear markets. Remember the terminology. The bull market is moving up, right? It's trending up. Okay, it's a positive market. That's a market we want to buy stocks in. Okay, we want to buy stocks. If we have options training starting out, we want to buy call options. We have some other strategies from there where we might do put credit spreads. We might do debit spreads. So there are different things there and beyond. But really, we want to buy stocks, right? We want to buy stocks. It's important to know what season we're in because then we know what's most optimal. Like I said earlier, obviously, buying stocks, very optimal in a uptrending or bullish or bull market, right? Just covering all the bases there. Well, obviously the opposite of that, and I know some of us, this is very new, okay? We've got some people who've heard this many times, but for some of us, this is very new. Bear markets, okay? Bear markets would be the opposite. Now, let me just quickly define a bear market. Now, we said last week, we have 4 seasons now in the market. Now, these are terms you won't hear a whole lot. We're mostly going to hear bear and bull, but we really have 4 seasons, okay? We've got accumulation, we've got advancing, we've got distribution, and decline. Accumulation, if you think of a rolling stock after a downtrend, after a bull market, there's steam being built up in the market. It was dropping. It's not strong yet, but it's not dropping the way it was anymore. And it typically precedes a new bull market, which we would call advancing. The market is advancing. It's new highs, right? And then from there, eventually we get into that old tired bull. We talked about that last week. We get that tired, more sideways. It's not declining, but it's declining in the sense that it's not as strong as it was, even though it is still moving up, or at least sideways. It's holding sideways. There's a rebalancing happen. Another word for that, distribution, right? They're in that distribution phase. And then from there, of course, it finally, for different reasons, and we'll talk about some of these today, it gives way and we enter into decline. Decline. So that decline is really our bear market. Okay, we're in the bear market. You can have the bear market. I'll talk about length and things like that in a minute. We don't really say, old, tired bear market because the bear markets don't tend to last very long. And when they die, they tend to just die pretty quick once they finally die. So they don't last as long. We don't hear that term. That's not something we would say. So we get into that decline, and that's that bear market. So, excuse me. That is defined to start out, right? We need to actually just define what is a bear market, technically speaking, all right? So if we take the high on a market, whatever the high is, right? Let's say today we closed at a new all-time high, or at least we did Friday, I should say. If we were to drop 20% or more, okay, 20% or more from the all-time high, okay? It doesn't always have to be the all-time high, right? The recent high is enough, but for us, the recent high is an all-time high. And I will pull this up here as we're talking because I'm deciding as we're going, this is just going to be so much easier if I just go ahead and show you guys. And that's just how we do here on Market Monday. So, yeah, we did get an all-time high at the close today. I didn't look at the market for the close. So let me show you this. Bingo. Let's make sure you guys can see it. Yep, there you go. So we're inside this new trend. And we're going to see. We're going to see if this trend is actually the new resistance lines. That's an ongoing conversation with our students. Very helpful to know. Where's support? Where's resistance? But that's another story for another day. Today, we're at that high. And if it were to drop 20%, which is a significant drop, okay, that is a significant drop, 20% from the high, then Wall Street officially considers that a bear market. We are no longer in a bull. We are in bear territory. The bull at that point is dead, okay? And that sounds kind of intense. It might drop that amount and hang out around 20 and actually recover. We've seen that in history for sure. And then the bull market it's not over, right? It just continues. But it came very close to being over. It could even technically close right below 20 and then shortly thereafter bounce back. And then you don't really have a bear market. Because what do we have here on the chart? Well, if you look at this, and we talked about the bull market being in this uptrending pattern, and even this longer term uptrend, right? Not just these blue lines that we've put more recently. Very steep, very convicted, if I'll say it that way. The pattern is an uptrend. It's higher highs and it's higher lows. You say, what does that mean? There's a low, there's a low, there's a low, there's a low. Think of these mountains, right? Peaks and valleys. The valleys are the lows here. Now they got very tight here, right? The lows were up in this range and then finally started moving back down again. But these are the lows and these are the highs, right? Peaks and valleys. So those lows are higher every time and the highs are higher every time or almost every time. Well, on the opposite side, we would have a downtrend where it's actually it's going diagonal this way. Let me give you guys more of a visual on here. I know there is there we go. If I were to come down to here and then come up and then down and then down. Well, let's say I really went down. You said, can that happen? Sure, that can happen. I'm going to show you it in a minute. Okay, so what do we got? We made a low. It's actually lower than this one, isn't it? Right? That would be right there. Then we made a high. Then we made a low. We made a lower high, then a low. And then we really dropped off the cliff, okay? Down we went. So that's an opposite. So we've got two things. We've got a downtrend in the market, not just in a stock, but in the S&P 500. We're in a downtrend. And that downtrend isn't just a downtrend. Here we are at the all-time high of 42.90, and we've gone 20% down from there. Okay, that would be an official bear market. This is important for us because of two main things. Number one, we want to know that we're ready. I'll say this, I'm saying this in two ways, that we're ready to trade a bear market. We can't be ready to trade a bear market if we don't even know what a bear market is and what tools are best in a bear market, number one. Number two, when it comes to our finances, especially our long-term money, we definitely want to have a correct understanding of bear markets, okay? Correct understanding of bear markets, correct preparation for bear markets are a massive advantage for you and yours, because most people have no idea what a bear market really is, why it is, what to do with it, some of the advantages of a bear market. That is correct. Advantages of a bear market, and the way that we can protect ourselves, in a bear market. I have a very simple approach to long-term, I'm going to say investing, but both trading and investing in a bear market, that if I go back and I back test it, I look on the charts and look at old bear markets and do it this way. Very simple, very straightforward. I don't guess the tops or the bottoms, right, of bull markets and bear markets, but I can actually actively be in and out of long-term money and do significantly better than any financial advisor that leaves their money in the market all the way. And we're going to talk about that. So being prepared for bear markets means having some vision for long-term money and having some skill sets to keep that short-term trading going in an environment that has advantages. And you say, well, what are those advantages? Well, we're going to get to that here for sure. But I want you to understand, 20% from the high downtrend, that is a bear market. We talked about the 4 seasons. Well, this is more like the winter, right? This is more like the winter. It comes in, it frosts over, and some things are dying. That's true. The bull market dies. Stocks decline significantly, especially the growth stocks, the ones that have really been hot and advancing in that economic season. Remember, there are certain stocks that, they're the growth stocks. They're exploding when the economy's hot, but they're not the staples, what we call the consumer staples, right? There's more consumer discretionary. That's where the extra money goes. But then if the hard times come, we've got staples. Those are the stocks that tend to hold stronger. They still will decline in a bear market, but they tend to hold stronger because they're the kinds of products and services that you just don't do without, right? We may not buy so many of the extra things if there's an economic downturn, right? A severe downturn, but there's some other things we're going to need. We needed Zoom last year. A lot of people needed Zoom. There was a massive amount of economic uncertainty for millions of people. And Zoom, well, it zoomed, right? They still needed Zoom. Clorox bleach. Now, yes, these were some specific things to the pandemic. There's no doubt about that. But you'll see in a bear market, which last year we did have a bear market, by the way. I'll talk about that as well. You'll see that there are things that hold strong, but we're going to see major declines in a lot of those stocks. So like the winter, you're going to see some things pull back, right? You're going to see some things stripped bare. But here's another, what's the word I'm looking for here? It's a parallel. That's the one. Got it. Parallel between the two is that, the winter's not going to last forever, right? Winter's not going to last forever. Bear markets come and bear markets go, okay? And I want you guys to understand that a bear market, while it is can be a negative thing economically, it is a normal part of the economic cycle, right? We've always had bear markets. And, something a little bit strange right now in terms of just the history of the stock market, other than last year, which of course the pandemic triggered that. That wasn't that our economy as a whole was in a bad spot. Actually, our economy was in an incredibly good spot, right? Some argue it maybe was the best or close to the best we'd ever had. So we had a bear market, but it was triggered by a very, very unique event, of course. Now, that said, the last actual, if you want to put it that way, bear market we had was in 2008. So 2008 to 2020 is a really long time without a bear market. And our mindset, for those of us that remember 2008 and what happened, it was very dramatic, and it was longer in terms of how long bear markets tend to be. And it was an economic reset for sure, but there was some really deep and I would even say dangerous financial irresponsibility that was a catalyst for it being as bad as it was, okay? So why do I say all that? Well, because bear markets, you don't know how bad they're going to be. And there are times when they are worse than others for varying reasons, but they are still a normal part of the cycle. So I want you guys to understand that a bear market doesn't have to be something that we are terrified of or that we're nervous about, or as traders that we can't actually say, you know what? There are advantages to being in a bear market, and I can be prepared for that. Okay, I can be prepared to protect my capital, and I can be prepared to have skill sets that take advantage of what's unique in a bear market. What's unique, well, we've covered one thing, obviously, is that the market is moving down. But the market moves down when there is selling, and selling tends to be attached to fear. Fear. Now, of course, we don't want to say that we are looking for, hoping for, or taking advantage of fear. If anything, if you've heard me teach in other courses, you know that one of my main things is helping eliminate fear from my own trading and from other people's trading. So we don't want fear in our trading, and we certainly don't want to partner with fear that anybody else is having. So let me just say that clearly. Now, that said, fear creates faster selling, then greed creates buying. Okay? There are exceptions, but generally speaking, the markets will go down faster because of fear, and in many cases, further, particularly, of course, when you're in a bear market. They go down pretty far, pretty fast. They certainly can. We're going to look at some bear markets here in a minute, but if there is that aggressive of selling in a pattern, what does that mean for you and I as traders? Well, if we have the skill sets, that means we could take advantage of some pretty great trading opportunities in the bear market. Also, remember, just like winter doesn't last forever. And what's on the other side of winter? Well, what's on the other side of winter is spring. Spring is an amazing season to be in the stock market. Now, I would say the last year for us has really been spring. It really has. Because let me go ahead and zoom this out again. I feel like we do this a lot. Let's just look at that now, okay? So here's our low. We finally hit that low March 23rd, okay? And started moving up. None of us were going to guess that low. We weren't going to go, oh, well, here you go. March 23rd, I guess the bear market is over, right? We don't guess. We don't have a crystal ball. We're not guessing the tops and bottoms of bear and bull markets. But we clearly started, you can see now, a move up there, okay? And we climbed all the way back up in about August, right? March to August. And from there, you can just see this thing was phenomenally hot and remains so because we got an all-time high today. So it is still incredibly hot, breaking into new highs, pushing the S&P into prices it's never been before. That's good for buying stocks. Still very much a bull market. But we definitely see springtime here, okay? We definitely see spring and summer, if you will, spring and summer. So we got to know that they come. That's normal. We can take advantage, but they also don't last forever. And when they change, they have set us up for some potentially really great opportunities because prices have reset. The economy has reset in many ways, okay? So that's very, very important. How long do they tend to last? Well, let's just look at a few here because, you could say they last anywhere from about 6 to 8 months on average over time, over history, of the bear markets we've had. And of course, last year, technically a bear market, look at this. You've got the high, which was on the 19th of February. 19th of February. And you've got the low on the 23rd of March. Okay? So we're talking just over a month. One single month before this thing turned around. Now, that's pretty remarkable in that the turnaround came fairly quickly, but it's also the fastest drop we've ever seen. Okay? The fastest drop we've ever seen. 3,400 respectively, right? Almost 3,400 points on the S&P down to 2,200. It's 1,200 points in just over a month. So a very, very fast drop. Not a typical bear market. Not typically what we would see, of course. But then, I don't remember another time where the entire economy was shut down almost instantaneously. It happened very, very quickly. So we had a bear market there, and in some ways, that definitely, it came back, but very, very unique. Now, I'm going to go ahead and switch my chart here to a weekly. Okay, so each candlestick that you see here now is a weekly chart, okay? There's that old tired bull. There's what that is, okay? That's what that is. You say, well, why didn't we have a bear market there? Well, we don't have time to go into this right now, but what we've seen since 2008 when it comes to bear markets is that the market has actually been propped up many times, right? The economy has been propped up because we've talked about the Fed. That's why the Fed is so heavily in focus. The Fed has tools to control the economy, and they have been more aggressive than ever since 2008 in not allowing the markets to fall or the economy to fall into a recession. They have definitely pumped money and buying and all kinds of stuff that they use, low interest rates, et cetera, to prop the market. Some think this is not a good thing. Some would say this is a good thing, taking more of a perspective to say, hey, if you're tired and you just drink a lot of Red Bull so that you can stay up, what's bound to happen after a little while, right? Okay, you got hyped up, you kept it going, but then the falls are a crash, right? But if you just keep pumping in the Red Bulls, then you just keep going. So where is this all taking us? That's another conversation. But for now, you can see the market remained very hot. And if it got close to a bear market, they definitely stepped in and saved it. Now here you can see there's the financial crisis, okay? So here we had a double top right there, 15, let's just say 1,600 points, not quite, but 1,600, and then a low of almost 700. So you can see it lost a significant amount of, this is very significant. Very significant. It took a long time to get to that, okay? So a major reset, and then look at the market from there, right? Very hot. There's your springtime. So I don't want you to be afraid of these bear markets. That said, we had one in 2000, we had one in 2008, and then of course last year, 12 years. So it's been a while since this has happened. Now, what are some of the things I want to know how to do? Now, I mentioned this already. If I'm in a bear market, I'm not going to buy stocks. So if the only skill set I have is stock trading, okay, then it's helpful for me to know how to define a bear market and know that I am going to be on the sidelines in a bear market, okay? If I have training to trade put options and other option strategies that I can utilize in a bear market, then I want to know what defines a bear market so I can switch my strategies and adapt to the season. If it's time for a heavier coat, you put on the heavier coat, right? That's the idea. I also want to know if I have any long-term money, how should I be responding? Now, we have an entire long-term program here at Tradeway to help folks manage their money. One of the things that we bring that's very unique and advantageous for our students is how we handle bear markets. Whereas most, and I know this for a fact, because even last year during the bear market, I got calls from students saying, my guy, I guess it could be a woman too, but my financial advisor left it in all the way down. It's devastated. My account is devastated. Now, we had talked about that at Tradeway. I'd heard about it when I became a student in February 2016. But remember, we hadn't had a bear market since 2008, 2009. So I hadn't actually seen a bear market yet. And here were these students saying it actually happened to me. Now, this recovered faster. So a lot of people were able to recover some, hopefully most, of what they lost. But they were, in fact, in that camp where it was left in all the way down. You do not have to put up with that. You do not have to do that. That is not the only approach, even if a lot of people who are selling products might say that it is. Unfortunately, that sometimes is the extent of the training that they receive, and that means that's the skill they're going to use. I would hope that you would at least hear from them. But I know in one case even, an acquaintance of mine, his brother was a financial advisor, and he was losing sleep because he didn't want to call his clients seeing that there was such a big drop. And to me, that is so avoidable because a couple of simple things implemented that we can teach you, and you can protect your money, right? You may not perfectly time it. Oh, wouldn't it be great if we could just get out of everything at the very beginning of the bear market and get back into everything at the very bottom of the bear market? Of course, that would be great, just like any trade, right? But if there's not a specific pattern showing us where it's going to reverse, we probably aren't going to catch the very top. We probably aren't going to catch the very bottom. And incidentally, that's part of the argument against trying to get in and out of the market, is that you can't time it, but you can certainly do a whole lot better with a fairly conservative strategy than leaving it all the way to the bottom and leaving it all the way down and wondering if when it, quote, comes back, if the specific stocks that you're in are the ones that come back. So there's a lot of assumptions there. We want to help you guys not have to do that. Okay, so some very, very, very important points there. And of course, that's our AMPed program, that long-term program. Some really big changes coming into the AMPed program too. I can't announce them today for everybody. People in the program, if you're out there, you're going to hear more about that soon. And everybody else will find out later this summer. But AMPed is our long-term program, and we really do help people navigate this part of what I'm talking about. Of course, everything else, we're teaching you how to use strategies that can make money in the market when it is making those faster, further moves down. Last year was no exception. Thinking about that, hey, when the market's moving down, I don't have to be stressed and just look and sit and wait and watch or try and trade stocks and lose money. I actually am implementing what we call bearish strategies so that as things are in an economic downturn, my trading skill set is actually an asset. And the season we're going through, though I don't wish that on anybody, of course, right? The season we're going through, I just need my at-home stock trading business. I just need my computer. I just need my trading account, and I just need my skill set, right? So that's something you can do. I was actively trading that season last year. And of course, all of our students were as well. So that's very, very helpful. Okay. Checking if we have any questions. Patricia says, I plan to be in AMPed by the end of the year. Well, it's definitely going to be, I see your comments, Jeffrey. It's definitely going to be something that I think you'll be even more excited about as time goes on this summer. Like I said, I can't announce that today, but there'll be some great things. And if you want to reach out to Tradeway, anybody out there, you want to reach out to Tradeway, support@tradeway.com. Just let us know you're interested in the AMP program. It's no obligation to you. Somebody in our AMP program will reach out to you, give you the details of what that looks like and the distinct advantages of it, both in cost and in approach. And they'd be happy to take care of that for you. So you can simply do that. Support@tradeway.com. That's the AMPed program, AMPT. Okay. So bottom line here, guys, bear markets. Okay. Being prepared. Long-term money, short-term money. Number one. Number two, not abnormal. Okay. Now let me hit this for a second. There was some abnormal behavior, right, in the financial crisis. If you guys have ever seen The Big Short, okay, now disclaimer, Big Short, there's some really vulgar parts of that movie. And I know that there's probably a lot of people out there you would not appreciate if I recommended that and you knew that you were in for that. So if you ever see that movie based on what I just said, I just want to make this very clear. Just know that that's in there. And I know that that's something that some of you don't want to watch. It does describe pretty remarkably what really happened. Okay, how did that really happen? Why do I bring that up right now? Because there are aspects of economic ebb and flow and downturns, more like the dot-com bubble, where there was so much growth, so much buying, it had far outpaced the real value of what was happening. For those of you that remember the dot-com bubble, I mean, there were people just putting websites up that didn't sell anything. These companies didn't even make any money. And yet they were being publicly traded at astronomical levels. And once people started to realize, like, this is mania in the strictest sense, of course, the bubble burst. And that's what we call a bubble, right? It's very thin, it's very vulnerable, and the bigger it gets, the more so, finally, it pops. And that's what happened. Well, in 2008, there was deeply systemic and irresponsible economic activities going, massive amounts of risk based on the idea, in short, that the housing market just doesn't go down. It doesn't fail. It's safe. It's going to hold. It's never crashed. It's going to be okay. Well, for some complex and not so complex reasons, that was not true. That was not true. And that's one of our hard and fast rules here at Tradeway. anything can happen. As soon as we get into a stock trade, option trade, any kind of position with risk, and we think this can happen and I know this can't happen. Careful. You can't manage risk if you can't assess the possibilities. And once you start prophesying to yourself what can never happen, you can't assess that possibility anymore. And that's not smart trading. And these are the smartest traders in the world, so to speak, biggest banks in the world. Well, they caused an incredible vulnerability in our financial system. So why do I want to say that right now? Well, because we do have economic ebb and flow, right? Times of downturn. It doesn't necessarily all have to be that dangerous. And of course, we're hoping in the future that those are the kinds of things that have been taken care of. Those things have had at least some regulation to keep them in place. They say that they've done that. In some sense, I think maybe they're just doing the same thing they used to do under a different name. You could say that's my opinion, and I'd be fine with that. That's okay with me, but we've just got to be ready. We've got to be ready, not afraid, not anxious, but ready for bear markets, both in the trading side and the long-term side. The winters come, that's normal, but they also pass, and we want to be ready. Here's the last thing I'd say. You don't want to learn how to trade a bear when it's a bear, right? By the time you feel like you know what to do, it's going to be over or close to, based on historic data, how long they tend to last. Mario, I see your question there, so I'm going to come back to that. You don't want to do that then. You want to do it now, right? You want to learn as soon as you possibly can. How do I manage this? Give yourself that buffer. Give yourself that time. So if you're just trading stocks, listen, you want to start looking at options. We have different ways for you to get in, low cost, learn how to trade options, okay? You can always email me at support@tradeway.com and let me know, Blair, I'm interested in looking at options for options, okay? We've got different things for you to do. Our memberships make them low cost. It's an amazing way to come in. You're in it for a month. It's not a long-term thing that you have to do. 85% of our students that do Trader Pro stay in for a year or longer, but you have the choice. So that is something that I would say you got to consider looking at options and at least understanding, what am I going to do with my long-term money if I'm going to be sitting on the sidelines when these things happen? So we're looking at an interesting season right now, you guys, because we've got this growth. Let me go back to where we are now. Still on a weekly chart here, right? Still on a weekly. So every one of these is a week in time, not a day. Where, what does all this economic stimulus mean, right? We've just been pumping cash and pumping cash and pumping cash. If inflation actually gets out of hand, interest rates are already at zero. What are some of the things they're going to do to manage that? Have we created a bubble? These are just speculative comments that, we'll see. It's gone up very, very quick, very fast. I'm not anticipating a bear market right around the corner, but I am always asking myself the question, what are the vulnerabilities in the markets and in our economic system, because so much of it has been propped up by the government, right? A lot of it propped up by the government. So we'll see how that plays out over time. Mario had a good question. Danny says hi. Hey, Danny. Glad to have you in here, man. Since the 1 month bear was not normal, do you think there's a real bear coming? No, I would say this. That was a real bear, right? That was a real bear. Because again, we defined 20% from the high. So it was a bear market. But like I think you're saying, Mario, it's not something that was typical, right? It wasn't the way it has been, where things tend to take a lot longer to turn around. And the catalysts take a lot longer to turn around. Whereas in this case, there was just such massive spending going into the markets that, into the economy, I should say, and thus to the markets, that they turned it around pretty fast. So is there a real bear coming? I'm going to say two things to that answer. Is there a real bear coming? My first answer is going to be yes. There is a bear coming, right? There is a bear coming. I guess we could theoretically go, well, what's happened in the past will never happen again. We are now going to be in a bull market forever, however long that is, right? Could say that, not going to say that. All right. The likelihood, very low, very low. It's going to happen. There's going to be downturns. There's going to be economic cycles. There's going to be resets. Stocks, even if they don't get into bear markets, they reset. They go to resistance, they come back down to support. They go to resistance, they come back down to support. That's what they do. They sell. They buy, they sell. They buy, they sell. Winter is coming, says Jeffrey. Now, I said I'll say two things to your question, Mario. The first one is, do I think there's a bear market coming? My answer, yes. The second one is just as important, though. Do I think it's coming at XYZ date? I have no idea, right? Do I think it's coming this year? I don't know, right? Well, what do you think about next year, Blair? I don't know, right? It's the most unsatisfying answer. It's the most unsatisfying answer I could give you because, gee, sure, wouldn't we love to know? Wouldn't we love to know? But I will say this. We need to know that one will eventually come. We need to be ready to do that, to embrace that, or at least we need to prepare for that eventuality. But part of what we're going to do in our programs, and this is something we're doing on the daily as we're looking at the markets every day. We get to do that every now and then here on Market Monday, but we're doing it every day in our programs. And so we are helping folks understand, hey, this is where the market is going soft. This is where things are risky. This is what we're watching. If the market starts to make specific patterns, then we know there's more downside risk. We have to remember the market, like any pattern, will first retrace, right? Retrace just from resistance to support. That's what the market has been doing. Normal, right? Sometimes big moves down, but still normal because it's still in the pattern. That's just a retracement. The second one is a correction. A correction is 10% or more from the high. It's not a bear market, but it's a correction. It's a bigger sell-off. There's something in the market, something in the economy that is catalytic for more selling, right? They are taking profits. They're moving, big boys, moving the risk out of the markets and putting it somewhere else. And then from there, we're getting further and we're getting into bear market territory. So you've got some stages there and we need to watch those first, right? Because those first two are normal. We're not going to hit a correction until we hit a retracement. Now, it can be so fast that they come pretty quickly, but that's the stages nonetheless that we're going to see play out. So we don't know. We don't know. It doesn't work on the calendar year. Jeffrey says winter's coming. It doesn't work on the calendar year, right? It's not going to be like, oh, here we go. It's November. It's time for a bear market. Of course, I know nobody's saying that, but I wish, man, don't we all wish it was just that simple? I'd be buying long-term puts every October. And then I'd set it and forget it. And I'd come back in March and I'd cash in, but it doesn't work that way. It doesn't work that way. So that's not what I do. All right, everybody. That is bear markets. That is bear markets in a nutshell, right? I love the intricacies of, what happened in .com and what happened in 2008 and all that stuff. We could dive into more of that kind of stuff, but this gives you those two things that I want you to know. How can I recognize what they are and manage long-term money in that situation? And number two, how can I avoid the opportunity cost when the market's moving further faster? I can be prepared ahead of time by learning how to use bearish, not just bullish, bearish strategies, okay? Bullish strategies obviously take up most of our time because usually the market is moving up. But in these times, this is where the well-rounded traders have skill sets to be able to get into the markets when they're moving down and not just having the opportunity cost. Protect your assets, but also have the ability to engage your assets during bear markets. All right, everybody. Thank you so much for being on. One more time, I'm posting the 5-day Faith and Finance Challenge. It's going to be biblically based breakthrough teaching for you. Remember, you get a whole lot more of that in that VIP. If you click that link, sign up. We're going to do a bunch of stuff in there. Come on, be on the breakthrough team. I'm going to go after breakthrough with everybody in this challenge. But I'm going to spend extra time with you guys in the VIP because I know you're hungry and we got to have some skin in the game. This is just part of it. This is part of trading. It's part of investing. We got to have skin in the game. No risk, no return. Doesn't work that way. Nothing works that way. And so we will see you in the challenge. Mario, Nancy, Patricia, Danny, Jeffrey. Make sure I didn't miss anybody else. I hope I didn't. I don't think I did. Nancy. Thank you guys for being on here. Everybody else, if I didn't hear from you, thank you. And of course, everybody watching the recording, if you know somebody who ought to watch this, right? You have a family member, a friend, they need to know about this, right? They need to know about how to trade in this season. They need to know about long-term, whatever the case might be. Make sure to tag them. Make sure to send it on over to them. Subscribe on Facebook, subscribe on YouTube, and we'll send you a notification so that you know when we're doing live broadcast episodes, information, and you can be a part of that. Thanks so much, guys. Have yourselves a good night, and we'll see you next time.